All right, all right. Hey guys, what's going on? I thought I'd just jump on really quickly and just follow some of the madness that is going on today. I did trade into AMC yesterday. I got about a 20% return today. I don't know if I'm going to sit this out or not, or whether I'm going to go in. I'm not really too sure at this point in time, but be interested to just follow along what is actually happening at this point in time live, because I know that there's a lot of excitement, there's a lot of euphoria around this, um, and I would imagine that a lot of you guys will have questions and stuff like that as well. So I just thought it would be an opportunity for us to have a little conversation, follow what's going on at the moment, and see how the day kind of pans out. I'm not going to be here for too long. I've got a meeting. When's my next meeting? I have a meeting, I think, in about a couple of hours. Yeah, at about 5. So we can spend as much time as we can on here. But yeah, I think as well, obviously, me being me, and you know the way I am, offer a little bit of perspective as well. Because I think, you know, JME, that's rallying today as well, looking at the charts. AMC at the minute is on a bit of it's going sideways at this point in time. But if you look at the chart all together, overall, it feels as though there's a little bit of downward kind of like momentum towards it at this point in time. Certainly from where it was early in the week. I mean, the peak on the chart that I'm looking at here, what was that? That was 68.34 a share. Yeah, 68.34 was, no, it's actually 68.43 was the top. And that was yesterday. Is that yesterday? Yeah, I've got yesterday. So we've gone from there. We're currently sat around about 49.98. So I got in yesterday at about 50 or so. I got out about 61. And yeah, it was very, very volatile. And if you're not used to these kind of things, like Jesus Christ, you can have a really bad time. I remember one point yesterday, I was down like 25%, and having to, basically just sit that out and make sure that you're okay with it it takes fortitude, and it takes a little bit of discipline and mental agility, like to be able to control yourself. Because a lot of people who go into positions like this and see that they're actually down will panic, basically sell, and that's how all of a sudden you've crystallized a loss that really, to be honest, was only a loss on paper in the first place. But that sentiment, when you're in a trade like that, it feels too visceral, it feels too real for you to sometimes think rationally about it. And I think if there's people who are involved in this right now who are just starting out, or maybe a little bit inexperienced around the stock markets, and they followed it obviously because of it's the fact that it's trending right now, it can be very, very nerve-wracking, and rightly so, especially if you're putting good amounts of money into this thing. And sometimes you can start to question whether you're ever going to have the kind of luck that other people have had when you hear people up 19 grand, up 30 grand, 100 grand here and there. You start to think, well, is this ever going to happen for me? And I think a lot of this stuff is luck, really. It's being at the right place, being at the right place, right time, having money available. And I think you also need to remember as well that, if someone's up, 19 grand, the question is, how much capital did you put in? These returns are often relative to the amount that you actually stake in the first place. So there needs to be an element of, you need to take stock of where you are and obviously do what you feel is right for you based on your circumstances, and try to weed out the noise and the hype that we see around these kind of stocks often when these kind of things happen. And so it's going to be interesting to see what happens with AMC today. Rain's there saying it's up 22. That's good. Are you holding? Are you holding for a period, or are you day trading? Because I know a ton of people who are actually, they're almost scalping, going in, getting a little bit of a gain, getting out with very, very specific targets, and making a little bit of money that way. Again, some people are using leverage for it as well to maximize those returns, but obviously there's that downside as well. So it'll be interesting to see what happens today. Generally, I don't know whether they've actually completed on the 11.5 million share allocation that they were going to sell yesterday. I don't know whether there's been any news on that just yet, but the overall feeling at this point in time, just looking at the charts, is that, I mean, it's opened at, what did it open at today? 49.96, I believe, was the open today. And yeah, we're currently at 48.63 at this point. Many will be looking at, perhaps buying the dip, maybe. I think the concept of buying the dip is great. However, because we don't know what's going to happen on the upside here, is trying to take a calculated guess or on the risk that you're taking by buying the dip. You're buying a dip with the possibility of significant upside, while you're buying the dip because it's the historic dip based on what's happened over the last couple of days, but not the lowest point that the stock has ever been or has been. So support lines and all that kind of stuff will come in really, really important here. It's going to be interesting, to say the least. Hey, Pete, this is a short squeeze play. I'm diamond handling this. Got in at 11 average. Wow, dude. You know what, Michael? See, you're the kind of person that I absolutely admire so much, because I'm not sure that. So if I got in at $11 and saw where it is right now and be up 226K, I'm not sure that I would have the balls to hold on. I honestly, hand on heart, would be thinking, actually, you know what? I'll take it now, and I'll just go. So you, sir, you have balls of steel. You absolutely do, because that right there is commitment to the cause, and it really is and to be honest, you're propping up everybody else as well, because I think the more people you have kind of selling, you kind of get into this effect where actually everything, then the share price takes a bit of a tumble and it all starts to fall apart. So, mate, kudos to you. What are you going to do with the cash, mate? What's the plan? What is he going to do? Is he going to buy a property? You're going to keep it invested? Hope you got a plan for it, mate. But that right there is sweet to read. Up 25, holding. Good, man. Rain put in 3,600, you're saying up there. Okay, so what did you say you're up by? You're up 22. That's good. It's really good. See, this is the beauty, and I've got a video coming out a bit later on, right? And these opportunities are great, because at the end of the day, it's one of the situations where, hedge funds, I've worked in the industry for 15, 16 years now, mainly in the investment world, not necessarily in the hedge fund or anything like that world, because when you look at financial services altogether, you've got different arms. So my career through wealth management was all about investing into funds, stocks, all that kind of stuff. Then you had the hedge fund boys and the traders kind of on the other spectrum to what I've done through my career. And you know that these guys go about shorting stocks all the time, and it's widely accepted, right? That's what they're there to do. They're there to seek opportunities in the market, and as a result of that, what they will often find is they will find opportunities where, guess what, we're going to short a stock because we think the share price is going to go down. And it's a beautiful thing to be able to see retail investors actually get involved in this and actually push the opposite way. Because I think one thing that the banks will definitely realize, and the hedge funds and a lot of financial institutions will certainly remember from 2021, is that retail investors are firmly in the investment game. And they have the vehicles, the leverage, they have the cash and the ability and the know-how to be able to play the opposite side of trades in these kind of scenarios. And the impact and the impact of retail money as this year definitely been felt. Definitely been felt. And I'm here on YouTube, obviously trying to teach people how to, invest in the stock market, use your money as efficiently as possible to build for the future. These kind of instances take that to the very extreme. All right. So they take it to the very, very extreme, where actually, you know what, if you're clever enough and you know what you're doing, and you're paying attention enough, over 2-3 days or over the course of 6 months, you could be up significantly, like Michael, 226,000 overall. This is life-changing sums of money. And historically, this has only been available to people via the banks, which you look back at this kind of stuff and you're thinking, how on earth does that happen? And I said this on a podcast that I'm a guest on this week. We blame the government, and we blame maybe the system for the fact that this hasn't always been available, and there are hurdles and barriers and all this kind of stuff. But I think, my take being in the industry is that we are moving into a new kind of like era. We're moving into an era where technology has given us things that we didn't have 20, 30 years ago. There's this argument of, the government doesn't want people to invest. The government doesn't want people to invest in the stock market and trade on the stock market and potentially have the freedom not to work on a day-to-day basis and so on and so forth. But you got to look back at it historically, back even 20 years, right? You couldn't invest today like you are today. You couldn't invest £1 a month. You couldn't go on to eToro and place a trade against a big hedge fund like you people are doing right now. You could never do that 20 years ago. And so it was a very, very different time. I find it almost a bit of a dichotomy almost, because we find ourselves in this situation, which is all very, very new. Power to the people, the ability to invest, so on and so forth. But then again, you then have the regulatory dangers around that as well, in terms of, there's lots of scams that come up as a result of this freedom in the market, so on and so forth. So you've got to contend with that. But I'm very, very excited about what it actually means for the future, and certainly what it means in the crypto space as well. So it's a very exciting time to be alive and to be watching this kind of stuff happen. And we underestimate sometimes that money operates in so many different spheres. So yeah, we're talking about the stock market right now and holding a hedge fund to account, right, for shorted a stock that they thought they could just, do whatever they wanted. Well, no, retail investors are involved in this now. But actually think about what this is doing for the likes of the guys at AMC. It's given the business an entire new lifeline, like literally an entire new lifeline. It's preserving jobs. It's doing good work. And unfortunately, people will win, people will lose. I think where you end up on that spectrum is really down to due diligence and just being as mindful and as watchful as you possibly can. But it's certainly an interesting place to be alive. Where are we at the minute? Okay, so it's actually gone up a little bit now, actually, AMC. So maybe, let's have a look at this. Where is this right now? It's climbing up through 50, 51. Okay, this is about where I got in yesterday. I got in about 50 yesterday. So it'll be interesting to see where it goes. I found it really, really interesting yesterday that around about midday in the States yesterday, when sort of middle of the trading day, things kind of cooled off a little bit. It went sideways for a bit, and we saw a really good rally in the last few hours of the day. And yesterday, when you first started out, you saw that massive uptick straight off the bat. Then it fell, and I think that's a byproduct of people holding positions overnight and out of hours trading. Then people thinking, actually, we're going to take profits, so on and so forth. It's really, really interesting watching this, and I'm really, really interested in the psychology of how people actually manage and deal with this kind of stuff. Because more than anything else, because you're dealing with money, it's very, very easy to get emotional and to have your common sense and strategy kind of run away with you. That isn't something that anyone should be blamed for, because we just have an emotional attachment to money at any given time. That's just the way things are. And I'm really interested in the emotional side of how this plays out, and how you can actually learn certain things about yourself, and actually certain things about, patterns within the market as well, so that you can equip yourself for future reference around things. Because it's very, very easy to panic when you see a red candlestick. Really, really easy to do that, particularly when you're losing money. You can see that red number keep, increasing in value. It will be interesting to see if this actually could it. I don't know. It will be interesting to see if 4 figures a share possible. I don't know. I'm not really sure. There would have to be a massive run. I mean, look at this at the moment. It's 51.86.93 right now. This might break 52 at this point in time. We're a long way off that, mate, to be honest. But I don't know. We'll see. We'll see. Yeah, so I'm interested to know when they're actually going to cover. Because my fear is that, back in January and stuff like that, especially when you're looking at GME. I keep saying JME for some reason, GME. They kind of all backed out, and I think there was the fact that Robinhood and everyone halted, the ability to actually trade didn't really, really help. And I fear whether we're going to get into that kind of situation again right now, and that's where your broker selection is going to be really, really important. I mean, I used eToro yesterday to get in, so if anyone's kind of concerned about, because I think trading in the UK, trading 212 definitely stopped a little bit of a trading. There was a handful of them as well that actually halted people being able to take positions and stuff. I think eToro and Fineco Bank were the two that I know that didn't really take a position or anything like that. They allow people to continue to place trades and place orders for bits and pieces as well. So we'll see. Marcus, average 7.9, 420 shares bought back at 500 shares and have been averaging up. Very, very nice. Really nice. That'll be a good profit position you'll be taking on that as well, actually. Nice. I know that there are a lot of call options on the 18th for this stock. I think there was 75,000 or so call options. So it'll be interesting to see what happens in the next week or so and how long this will actually go on for. Because if the share price does go up and those options get exercised, things will absolutely go nuts from that point onwards. So I'm going to invest the vast majority of my profits in my Vanguard Global Index Fund, going to withdraw 4% per year for FIRE. I don't think it's wise to take a lot of risk with large profits. Yeah, I mean, I think ultimately, and this is where it's all about trying to at least understand what your strategy is and what your approach is whenever you're kind of investing all together, right? And like, so for you, Michael, I mean, you've got Vanguard, you've got an index fund there, and you're obviously taking almost like a core satellite approach or dual approach to your investing. You're not just doing one thing. I think what a lot of people sometimes do is they will either invest solely in kind of like individual stocks exclusively, and that will be their main portfolio. And obviously, individual stocks will always be volatile when you're holding them. So you've got to build yourself a good portfolio to give yourself diversification and so on and so forth. Or people just simply do index funds. Now, my approach to investing is kind of like a little bit of both, because I do like certain companies. And I do want exposure to certain companies, but I still feel as though, having an index fund of some kind allows you to diversify and get mass saturation across a number of companies. And that means that when markets are volatile, markets do go up and down, you have that safety net that you haven't got all of your eggs in one basket. It's kind of spread all over the place. So I definitely get what you're saying on there, because you need to understand what your approach is going to be, and whatever you do has to be in line and in tandem with what your approach or your investment philosophy is going to be. So I think that's really, really important. I mean, you're on a FIRE journey, I guess. 4% withdrawals. I mean, 4% withdrawals that's the what do they call it? What do we call it? The optimal amount of withdrawal, or the safe withdrawal limit for income purposes. I wonder if you're going to mix anything with some dividend stocks and dividend portfolios as well, because that will be a good income generation vehicle for you as well, in addition to the 4% that you draw to. My colleague was insisting me to buy AMC 2 weeks ago when it was $12. Thank God I bought 200 shares. Listen, that right there. My God, are you still holding? If you're still holding, you've done really, really well. Have you taken any profits? Or are you just literally holding everything in there? Again, this is where, like, a lot of the time, you've just got to be in the right place at the right time. You've got to hold the right things, and you can't foretell these kind of things. I mean, I think from January there was a little bit of writing on the wall that this was not over, but I don't think anybody would have thought that we'll be 6 months down the line, almost, from 5 months down the line from January, and still be in the same position where we're seeing the same scenarios almost play out over again. I was reading an article yesterday, and it was funny. And this is one in the mainstream tabloids here in the UK. They were talking about the fact that the hedge funds they're better prepared this time round, and they're not going to yield any quarters. It's like, well, okay, that's fighting talk, but when you've got to cover, you've got to cover. So, and of course, they're going to deploy whatever strategies they can to try and spook people and stuff. But if everybody holds, then you're going to hold them to the account. But thank God you bought those shares. You'll be in good profit right now. So my portfolio take a dive of 7 grand yesterday. I didn't even think about selling. See, there you go. That's all about mental fortitude and actually having a strategy and believing that what you are doing is right. And a lot of the time, again, this is psychological, right? A lot of the time, people will look at it and think, "Oh my god, that's 7 grand." And I always look at two ways, right? Yeah, it's 7 grand that you've lost, and it's not nice seeing that, but actually it's not real until you physically close that trade and cash that in. And I had it yesterday. I was 25% down. I was like, but at the end of the day, if you're holding and you believe that it's going to come good, then you just got to roll with your conviction. You've got to stick with it and just make sure that you are okay with your position. And I think that's the most important thing. Conviction is everything. Conviction in your strategy. I mean, 30K on AMC, then I realized I was using. Oh dear. I tell you what, mate. That's why virtual accounts are so great, right? Because you can have a look at what you could have won, what you could have won if you were participating. And virtual accounts are great because I often question whether you actually learn anything when you're in a virtual account. Like I truly do question that because like it's not real money, and there's something very very different when you open a trade and you put your own money in and you see it go up or you see it go down. And I don't know about anybody else watching this, but sometimes it is very very easy that when you open a trade and it's going up, even if you have got a target, you're like, okay, you know what, I'll be sweet if I get a 10% return today, and you've got that as your target. But there's always this human element in us where we're thinking, I might hold on a little bit. It might go to 11. It might go to 12. And then inevitably it trails off the other way. And you're just like, don't, I should have cashed out. And then you're thinking, strategy and psychology is so, so powerful. So powerful when it comes to kind of money. I used to work in Canary Wharf, and I had a friend who worked for one of the investment houses over there, and he was a trader. And he said when he first started, he always took it really, really hard, that he lost money that day. And he goes, it wasn't my money, it was like client money. But he goes, he found it really, really hard. And his manager was like, stop beating yourself up. Like, you did what you did, that you've lost a little bit of money today. There's nothing you can do about it. There's nothing, you can't go back and go get it. And one of the things that he said his manager tried to get them to do was to essentially, they would run a practice where they have like £20 notes and just throw it in the bin and be like, listen, throw it in the bin, forget it. You've lost money, it's gone. And slowly but surely, you said, you start to get thicker skin. You don't look at the losses so much. You literally try to make sure you get as regimented as possible, and you have your own systems in place in terms of what your strategy is going to be. And you get as regimented as possible, become as efficient as possible when it comes to trading. So that way, it starts to build that process and that leads to basically being a bit more profitable. But yeah, I mean, he came out of it a while back because for him, it was just so stressful. It's dealing with the stress sometimes for many people can't actually deal with. So, Monolis, virtual account. Let's have a look at this one. Fidelity UK small cap been doing wonders, double-digit returns. Yeah, I mean, I think I haven't looked at it specifically, but you can think about where we are as an economy in the UK. I mean, we're about to come out of lockdown, hopefully in the next couple of weeks. So you can definitely see where the small cap will do great as the news of lockdown kind of like returns. And this is where, when you're looking at stock market or you're looking at companies to invest in, yes, you got large cap, mid cap, small cap. The large cap often will give you a lot of a foundation in your portfolio. So you've got those guys, the big guys, the share prices may not move as sharply as if you're in the mid cap or the small cap. But actually, when it comes to the opposite side of things, where you're looking at, maybe growth, mid cap, small cap, often with small movements make a huge difference sometimes in portfolios, because they are not as big as the good guys. And, a 1% uptick in business for them is huge. And that also is reflected in investment portfolios as well. So it's interesting. Good question on this. Pete, do you still have faith in Tesla? Yes, I do. I'm still holding my Tesla stock. I haven't sold any of it. Most of it's in Hargreaves Lansdown. I've got a little bit in in eToro, and I've got a little bit somewhere else as well, but most of it's in Hargreaves Lansdown. I haven't sold any. I've still got it. I'm still going to hold it. I think they will do well. I think they've just got a bit of a bumpy ride. I mean, like yesterday I was reading they've got, and this is the one thing about Tesla, right? I've actually got a Tesla, but I've had my Tesla now for 6 years. I'm not going to get rid of it. I'm just going to run it into the ground, basically. Something that we owners have been speaking about for so long, has now come back to bite them in the ass. And that is basically build quality and attention to detail. Do you care? It amazes me. And honestly, Tesla's the only company where I know that the owners are happy to put up with it. And the fact that you can go and buy, and don't get me wrong, like I've got a Model S, you buy that brand new, you're talking over 100 grand. I know people who have bought a Model S, like a P100D, like top of the line Model S, paid 110, 120,000 pounds for this car. You go and pick this up, and I've had instances where there's scratches on the car, and Tesla don't pay attention to that kind of stuff. Their attention to detail in that regard is really, really poor. Panel gaps has been a huge thing. I mean, my one I've had for 6 years, so it's relatively old now. Great with Tesla, you get software updates, and it's not that many buttons, so the car still feels fresh. But panel gaps, simple attention to detail is something that they've always struggled with, and now they're recalling 6,000 cars because of the possibility of loose screws and bolts, basically. And it's like, pay a little bit more attention to detail, and then you won't have these kind of problems where your share price is taking a little bit of hit because you're having all of this negative press. These, like, fair enough, there are things that you can't control. Chip shortage, you can't control that, completely outside of your realm of control. But things like making sure that when a car leaves the manufacturing line, that bolts are screwed on properly, that panel gaps are all done properly, and the quality of the car is as best as it could be for your customers. That is well within your control. And I think they've got away with it for a very, very long time. And I think they've got away with it because of the euphoria that exists around the brand, the excitement, the fact that it is something new. The challenge that they do have now is the fact that the EQS looks freaking awesome. I mean, the EQS looks amazing. You look at the Lucid Air, that looks absolutely amazing. As more manufacturers start stepping into the sector and start producing cars, you're going to have issues, because now all of those little imperfections, those little things that people were quite willing to put up with because you were the only game in town, now people are going to start thinking, hang on a second, I don't have to deal with this. I mean, one of the things that really annoys me about Tesla as well, right? You go and take your car to Tesla to be serviced. I've had Audis and BMWs and all sorts of stuff in my time, right? You take your car to get serviced. What happens? They service your car. They clean your car inside and out. Does that happen with Tesla? The last 3 times I've had the car serviced, no. Still comes back out dirty. I had it come out once. They washed it, but they didn't wash it properly. It's like they forgot to rinse it. It came back with smears. It came back with all kinds of stuff. And this is a groundbreaking company. Like, this is going to be a big issue, a massive issue for them. So as much as I believe in like the company, I am holding the stock, but they do have to deal with some very fundamental things. And one of them has come back to bite them in the arse, in the fact that they just need to pay more attention to detail when it's on the manufacturing line and before anything ever leaves the manufacturing line, because people aren't going to be putting up with this nonsense with, you know, the Porsche Taycan out and the Mercedes EQS and, you know, all of these new cars coming out now. I saw, I was in London last week and I saw the new, I want to say the Honda One. It looks amazing. Little car. It looks amazing. Head turner, straight off the bat. People aren't going to be putting up with this nonsense. The advantage that they do have is they have the widest selection of superchargers globally. They have got the highest range on the market currently. Performance numbers, they probably beat everybody on that as well. The tech is ahead of everybody else in terms of autopilot, self-driving, all those kind of things. But you do have to question how far behind are the other guys? Because at the end of the day, this isn't a race where everybody's standing still. Everybody's literally racing. They are at the races. So if they drop the ball, my fear is that they're going to get overtaken. But I think they've got enough from a strategic point of view to keep their noses ahead as the first lot to the races, really. But who knows? Who knows? Question here. Okay, so what is small cap? So small cap essentially. So if you think about the number of if you look at the categories of companies, right? So what is a large cap company? A large cap company will be someone like maybe Tesco's here in the UK, or Coca-Cola. That's a large cap company. Then you're going to have mid cap companies which aren't as big as the top guys. So when you look at large cap, they have so you typically look at how much they're worth. So you might hear the phrase they have a market cap of $2.5 billion or $2.5 trillion. Like Apple's market cap is $2.3 trillion. So large cap are companies with quite a lot of a market capitalization in terms of their value. Mid caps will be the guys who may be in the region of around about maybe 100 or so million, or so 700 million, 500 million. That might be large cap. Medium cap. Then small cap will be smaller companies. So their cap may only be in the region of 70 million, something like that. They're small. They're not as big as the big boys. They are generally companies that are new onto the stock market, but they are growing. They are burgeoning businesses, but they're not as established, and they haven't been around as long as some of the big boys. So they're mainly startups, new to the stock market, fledgling, burgeoning businesses. I joined eToro and started investing off the back of your video at the late age of 43. Mate, listen, it's never too late. I'm 42 in November, and I wish that I knew what I know now at age 20, because if I did, my life would be very, very different. So it's not too late. You've still got lots of time, mate. I mean, look, invest for 20 odd years or so. You can still rack up quite a lot of cash. The important thing is just making sure that you're using your financial resources right now to give you the biggest amount of money to invest over the long term as possible. It's all about, for you, Matt, financial resources, financial management, and allocating your finances appropriately, in line with what obviously doesn't deprive you of enjoying your life currently, because that's obviously, when we have these kind of conversations with people, certainly on one-on-ones, when I do coaching, we have this conversation around there's a spectrum here. You kind of want to be in the middle, so you don't feel as though you're working and not able to enjoy your money. Then invest in for the future, because sometimes people feel as though they're cheating themselves. They're cheating themselves of the present. Whereas what you want to do is you want to kind of get a little bit of a balance. So earning as much as possible, earning potential right now, very, very important. But the allocation of those funds, also very, very important at the moment for you. Cheers. Oh, I like this. Thank you. I learned a lot watching you and Panda Boss. Anna's great. I want to thank you and her for making videos for us. Now, me and wife have invested in Vanguard stocks and shares ISA. Listen, that kind of stuff is music to my ears. It really, really is. I find that I'm very, very fortunate that I know what I know as a byproduct of me being in the industry. I honestly think, because of my background and like my environment growing up, if I didn't end up working in financial services, I wouldn't know anything of what I know right now. And that thought is actually quite scary, because none of this information should be kept from anybody. It shouldn't be a secret. It shouldn't be guarded in any way, shape, or form. And we can blame, and historically, I have blamed the education system. But again, I had a conversation with someone. They're saying, well, actually, you know what? Back in the 60s and 70s, you couldn't invest in the stock market. So what were they going to teach you in school? Like, really? And it's true. It really is true. It's a concern now because of technology, because the fact that we can go on eToro and start investing. We have got Vanguard. We have got all of these ways to invest small amounts of money. Like when I was 17, you had to have like 5K, 10K. I didn't have 10K, 5K when I was 17. I was homeless at 17. Like I've got no family here. I was trying to fend for myself. It was survival mode at that point. I wasn't looking at investing in the stock market or trying to find that kind of information. Like if you wanted to find information back then, you had to go to a library. Like that's how backwards and how almost archaic the world was back then. And like this is not like too far into history. This is like 20 odd years, 20 plus years ago. Like we've come such a long way, a massive, massive long way in a very short period of time. And you just have to think about, we talk about the stock market now being like, oh, exciting. Crypto, where is crypto and things like that going to be? That's going to be the new stock market moving forward. So where's the education going to come from? That should be included in our education, system right now, without hindsight of what we didn't learn back in the day, because well, the stock market wasn't really accessible. But we definitely need to be having it in our financial, in our education system right now. We definitely need to. Yeah, there's a good comment comment here. Yeah, I mean, this is I've if you go onto the Tesla's owners group on Facebook, you will see so many stories about this. So many stories. It's bad. It's like, and like you ask them to fix it, and obviously they will, but it's like you shouldn't, like you just paid 100 grand for the car. Like you've probably waited for it to arrive like maybe 2-3 months. Like you're excited, you just want to get into your new car. Like you don't want to have to then be like, oh, this is wrong, this is wrong, this is wrong, I'm going to leave it with you to get it sorted out. Like it just ruined the entire experience. They need to get that right. I saw an Audi e-tron GT the other day on the road starting car. Yeah, I mean, I have not actually looked at that just yet. There's an Audi garage not too far away from me. See, the thing is, right, I like all of the new ones that are out. I do. My concern is charging facilities for all of the new cars. Beyond the Tesla supercharging network, there is not enough in terms of infrastructure right now. That may change in maybe 3-4 years' time. And that's obviously an investment opportunity potentially for people. But at the moment, it concerns me because like I can get in my car, and bearing in mind, mine's 6 years old. So when I bought that car, 242 miles was pretty much the top. And that my one at the time was the daddy of the time, right? It's not anymore. Now the newer ones with 340, 350 miles, they can go much, much further. So, I mean, I go to London quite a bit. I can go to London, charge 20 minutes, get into the city, run around, do what I need to do, drive back, charge once, get home. If I was in an Audi e-tron, I would be worried about where I would charge, how long it would take me to charge, so on and so forth. So I like the idea of all these other cars. And look, let's face it, that Audi e-tron will have way better build quality. The Mercedes EQS, way better build quality. But at the moment, the one big advantage that they have is the supercharging network. It's a huge advantage. There are so many of them. The car does all the work for you. You say, oh, I want to go from here to here. It will work out the route, tell you you need to stop here to charge for 10, 15, 20 minutes. And it will tell you when you've got enough juice to continue carrying on. It is so intelligent that it takes away the worry. A lot of people talk about range anxiety. I've had my car for 6 years. I've only ever been worried that I was going to run out once, and I got to the supercharger with 1%, and that's because I had to take a massive detour because there was an accident on the road and I didn't account for it. That's once in 6 years. But I'm interested to have a look at some of the new electric cars coming out. Really, I am. But I'm also reticent to spend that kind of money. I don't really want to go and have to put a load of cash into a car. I don't feel the need to do that anymore. Yeah, there's a conversation about the e-tron GT in there banging. It's a good comment here. They're clearly overwhelmed. If Apple steps in, the game will be completely different. Very, very true. The great thing about Apple is obviously they're a tech company in their own right, and they've got stupid cash, ridiculous cash. I mean, they potentially could be the ones that would, because of the interface with iPhones and all this kind of stuff, you can see that they have the foundations already in place to actually be the front runners. It will take a lot of investment and time to do that, but it'll be interesting to see what they come out with because they are developing an electric car as well. So cheers, mate. 42, you look 30. Cheers, buddy. Appreciate that. Um, is there a benefit to buying a share of a growing small cap than over a big cap growing company? Yeah, there is. I mean, if you identify yourself a small cap company that you think is going to do really, really well, there's nothing wrong with you buying the share in that company. I mean, the great thing is if you think of it this way, you're getting in at a company at the very, very beginning. So oftentimes when people invest in businesses, if the business does really, really well, because you're in day one, you have more room for growth than if you joined halfway through. Does that make sense? So, for example, if you're able to buy this company at, I don't know, £2 a share, for example, and let's just say over the next 5 years, the company explodes, it does really, really well, and the share price goes up to 25 quid, then obviously you've made a lot of profit in there. So the risk, the thing is, you've got to understand the risk that you have. So larger companies, they've got more financial resources. They've been around for much, much longer. They're more established. They're selling product. They've got probably a loyal customer base. They have a market advantage, most likely. So you have that element of it's a less risky investment because they're a big company. With a small company, they may not have a loyal customer base. They may not have a product that they're selling shed loads of, right? They're growing. They're just starting out. But if they do get it right, huge potential for growth. So yeah, you can buy. There is benefit in buying a small cap over a large cap company. Absolutely. I think you just need to make sure that you take the approach that you feel is comfortable for you. For many people, they'll be like, you know what, I'm going to invest in a ton of large cap companies, but I'm also going to invest in some small cap companies as well. So you've got a bit of security, but you've also got an engine for growth in some of the small cap ones too. Pete, do you think there will be a global recession soon? If so, how would you hedge against this? Buy gold. Gold is a good diversifier, generally speaking. It always has been. I mean, the benefit that you have with gold is you will have a lot of the big money. So investment houses and stuff will end up buying gold just to, park money someplace. Do I think there will be a global recession soon? Potentially, yes. Potentially, yes. The question is when and what is going to be the catalyst for it. I mean, many people will argue from an economic point of view that maybe inflation risk, and if there is hyperinflation, that may facilitate a recession in the States. If something happens in the States, generally there is knock-on effects in Europe and in the UK. Whether it impacts China or not, probably will to a certain extent if you start looking at the debt connection, so on and so forth. Possibly. I mean, look, we're overdue a market correction now by quite a long way. And whilst we know that we're overdue and there will be one or there should be one soon, the reality is we're also moving into a completely new era where, sometimes when you invest in fundamentals don't even make any sense anymore. So we may go for the next 5 years with no recession and just go on another bull run. And maybe recessionary periods are not going to be as pronounced. So you're not going to see a huge correction like you did back in 2007, 2008, where it was 50%. You might just have more frequent drops of 10, 20%, 30% on a more prolonged or protracted period. And that may be the new recession cycles moving forward. Who knows? It's really, really hard to tell. Technology has done a lot for the markets. Like, back in 2007, 2008, when we didn't have all of these apps, all of that money was flowing through investment houses and banks and, all of these companies. Like, that is no longer the case. Retail investors like you and I are taking charge of our own cash. We're controlling this ourselves. We're not going to banks who then have to go through certain protocols and all this kind of stuff in order to move money around. And, and all that kind of stuff. We get the power. We are able to do that ourselves without any intervention at all from the big boys. So that does have an impact on inflows into the markets. It really, really does. And as long as you have inflows going into the markets are always going to be propped up in some way, shape, or form. You can talk about QE and what the governments, the Fed have been doing around just printing money to prop up the stock market. That has to stop at some point. That could potentially cause a recession, because it will be an overall, well, it wouldn't, not necessarily a recession in the traditional sense, but it could cause a market correction. But the Fed and monetary policy, the job is to help stabilize markets and keep markets healthy. They will never do anything like completely stop QE, printing money, if they know that it's going to have a massive negative impact on the stock market. That would be financial suicide. So, that needs to be tapered off over a period of time. But we've had so much of it for such a long time that it feeds into this perfect storm that we're in right now, essentially, where equities have been at all-time high last year through no literal logic at all, but purely because we had so much come together to form this really bizarre bubble of everything's going up, when really the world's locked down and everything really should be going down. It's crazy. Sam, looked at buying Tesla this week. Tesla customer service completely turned me off. Yeah. Unfortunately, yeah, the customer service could be a little bit better sometimes. The weird thing is, right, and this is one thing that I find really bizarre, and this is to their credit as well, because they have got this right. And this is one thing that has allowed the business to survive as long as it has and do as well as it has, is that they don't go down the traditional route of car dealerships. No. Like, I know people who have bought and ordered their Teslas online, having never, ever seen the car, having never, ever driven one. For me, that's bizarre. Like, my one, I went to go see it. I went to go drive it. I have to be able to do that thing, because for me, ordering something online, something like a car anyway, and not knowing what it's going to drive like, or that doesn't work for me. And their customer service is kind of like their touch point, and it's one of the only touch points that you essentially have. And my experience is, you can get them on a good day, you can get them on a bad day. To be honest, I've had more good days with them than I've had bad days. But on the bad days, it's like, come on, like, a customer should never be made to feel like that. But one thing I will say is, and this is uniform with everyone that I know who has ever bought a Tesla, is that when they get the car, it's mind blowing. And I remember having that feeling when I bought mine. It's absolutely mind blowing. It's a completely different, it's a different kettle of fish. It's a different way of driving. It's completely different. And you immediately fall in love with the responsiveness, just the drive. The tech is freaking awesome, especially in some of the new ones where you've got autopilot and stuff. I mean, that thing, my one hasn't got autopilot because it's an old version now, but I've had them as courtesy cars, and autopilot is amazing. Like, if you're on long journeys like I used to be on, just being able to set that thing on the motorway and just relax, it takes the stress out of driving. It really, really does. And the great thing with these things, you've got the ability to put your foot down and just go. And like, not a lot of cars, unless you get into supercar territory, can keep up with you or even hold a torch to you. And that in itself is a little bit of it's a very guy thing, but that it's there if you ever needed it. But if you do think about using, going back to, I would definitely go test drive one, Sam, if you've not. If you do want to buy one, if you're looking at free supercharging as well, let me know, because I can send you my referral code and you'll get some free supercharging. This is going to bring us back to center really. So just tuned in. Sorry if it's been asked, what's your voice on AMC today? You know what? I don't know what at the minute. Well, it's at 52 right now. So as the question is, I mean, look, we know that there is a lot going on at the moment in terms of the shorts. I don't see the momentum in this today. But again, it's still very, very early in the day at this point in time. But if you look at yesterday and some of the volumes, I'm not sure that the volumes today are the same as what they were yesterday, and certainly not Wednesday as well. So I don't know whether momentum has dropped out of this at the moment. We don't know. I don't personally know when the shorts need to be met personally, but it will be interesting to see what happens today. I think many people were hoping that it was going to get back up to around about 60, but I mean, yesterday around about 4 o'clock or so, I mean, I got out about 61, I think it was. I think it closed at about, what did it close at yesterday? Did it close at 58 or something like that? It closed in the 50s yesterday. Whether we see a little bit of a repeat of that today, I don't really know. I think I wanted to do this live purely because I watched a lot of YouTube like yesterday, watching people with live sessions, and there was a lot of kind of like hype on these kind of things. And I look back to January this year when we had the first round of all of this stuff going on, and I remember after everything died off, people still holding, like, and specifically in GME, people still holding, and the share price literally just sliding. I remember seeing in the Reddit group, there was a comment by a guy, and this is maybe 3 or 4 days after kind of like everything dropped off, and he was saying like, are we still holding, by the way, guys, or should I have cashed out? And it's like, dude, the party's over. Like at that point, the party was fully off and done with. I think a lot of the time where there's a lot of euphoria, that's great, but it's really important to understand what you're doing and what you're going into. These things are driven, they're not driven on fundamentals. Actually, it's jumped to 54 right now. A lot of these aren't driven on fundamentals. It's literally driven on human emotion and psychology, right? It's human behavior that is keeping this thing going to a certain extent. So I think when you're going into this, me being a party pooper like I normally am, because I like to keep it real with people, is if you're Googling this stuff and you're thinking, oh my God, AMC's gone up and people have made a load of money and I'm just gonna put a load of money in, then you're starting from the wrong basis. You need to start from the right basis, at least understand what you're doing. And I think that's what a lot of people miss. What will happen today? I don't know. I would like to think that it would close at around about 57.50 and keep a little bit of momentum, at least finish higher than what it opened today. Because I think from a psychological point of view, that will give people confidence going into trades on Monday. We know that there's a lot of call options or put options. There's about 75,000 of them on June 18th at $73. Will it keep going until then? I don't know. Who knows? We're not going to know for sure, but it'll be interesting to see what happens. I mean, we saw a little bit, it's gone up a little bit. It did jump a little bit, gapped up a little bit there, but it's now at, where is it right now? What's the bottom of this candle? It's about 53 now. So we seem to be in that region of around about 50, and the highest that is tested so far, let's get this quickly here. The highest that it's tested so far is around about 54 is the highest that it's tested from what I can see here. So who knows what's going to happen today? We'll see. But I guess if anybody's holding this stuff, it's the psychology of what you go through when what you expect to happen doesn't quite happen. Do you have the fortitude and the conviction in your strategy to be like, okay, I'm going to hold this because I think this is going to happen? I mean, watching reds and watching greens, especially when you're day trading like this and you're looking at the chart, it is a roller coaster. It's like, oh my God, yeah, I'm making a lot of money. Oh my God, I'm losing money. It's being able to self-regulate. You know what? I did actually watch Elon on SNL. I thought he was really good, actually, to be fair. He was better than I thought he was going to be, because Elon can be quite awkward sometimes. And when he speaks, he's very he sometimes stumbles over his words and he takes his time over his words. I thought his delivery was actually really, really good in a lot of the skits that they had on SNL. I was actually quite surprised that he was able to do that well on SNL, but maybe that's just me. Apple steps in the EV, the landscape will be very different. Imagine how, yeah, they would have really, really good customer service. You know what? To think about the kind of interfaces that they would have in an electric car if they built an electric car would be absolutely incredible. I mean, can you imagine? Everything would be connected automatically. It all becomes part of your ecosystem then. I mean, I've got Macs, I've got AirPods, I've got iPhones, I've got iPads in my household. Like I've got a lot of Apple products. Just to add an Apple card to your repertoire, everything connected. I mean, the stuff that they could do would be just boundless. Imagine, having the ability for it to be self-driven, and because you've got a Mac, it automatically connects to like you can do work in your car, like on the screens as like you're in an office or you're on a simple like one of their monitors. Like possibilities are crazy if they manage to do that. So I'm excited. Yeah, are they though? Are they a lifestyle company? I don't know. I picture Apple as a tech company first and foremost. I mean, they do obviously produce lifestyle products and stuff, but I've always seen them as a tech company first and foremost because a lot of the products that they produce are tech based. But I don't know. This one talking about the infrastructure across for EVs. I think we're behind in the UK, to be fair, but I think we're better than Europe. Because, like I said, I did a drive to Stelvio Pass 2 years ago in my Tesla, and literally we went through Belgium, Germany, Austria, um, Switzerland, and Italy, and we supercharged the entire way there. Like, didn't pay a penny in fuel, and that is a beautiful thing. And that's across a number of countries. I think we've got as a country, we've got the most amount of superchargers in a country outside of the United States, because in certain places in Europe they are far between, but there's more and more and more coming online. One thing that I know that they were working on was a quicker installation of supercharging stations, because they want to be able to ramp out as many as possible, whereas before it would take 2 weeks to get a supercharging station up and running. They've been trialing an easier installation process that means that they can get one in like 2-3 days, because they're trying to ramp that up. And I know that they've been testing that out, but that's mainly in the States, and there's shed loads of them in the States, basically. But infrastructure definitely needs to be improved, and it's all going to be about what government incentives they're going to be and what companies are actually doing in terms of actually, putting these infrastructures in place. This is an impossible question to ask. Where would you put 200,000 for the best return over 12 months? That completely depends on what your risk appetite is. Assuming you want to go all risk, well, you could do anything. You could go and buy literally all Amazon or all Tesla, or go and literally put all of it into AMC. The reality is we don't know what the returns are going to be over a 12-month period, and the level of risk that you're willing to take will heavily dictate what level of returns you're likely to get, because you're giving yourself exposure to equity markets. You definitely need to be involved in equity markets in order to get the highest return. If you're playing on things like the bond markets, no, you're not going to get anything at all. So you need to have exposure to the equity markets to get the highest return possible. But what degree do you have access to the equity markets? Are you 100%, 80%, 50%, 20%? What's over a 12-month period? What's your objective? What do you need the money for? Why 12 months? What level of risk are you willing to take? If you're looking at high risk, then there will be a ton of like 100% equity portfolios that you can go and buy on Vanguard, for example. But it really depends on the objectives and so on and so forth. I mean, what's doing really, really well at the moment? And again, do not take this as financial advice. Do not go and buy them just because I'm going to reel off these examples. But emerging markets has done extremely well this year. I mean, the numbers on those are ridiculous. I think some of them have done like 60% emerging market ETFs on Vanguard. Again, don't just go buy it because I've given you that example, because it may not be right for you. But if you're chasing the highest returns, the choices are numerous, but you're basing your buy decision on current performance, which is no indication to future performance. So you have to rein it back a little bit and ask yourself, right, what level of risk are you willing to take? Then you start to look at geographical regions. Is it emerging markets? Is it the States? So on and so forth. What level of exposure do you want to equities? Those kind of things need to be answered first. Actually, mate, I do. Mate, I can't even remember. I've had my car for 6 years. I've not been to a petrol station for such a long time. Um, yeah, I've not been to a station for a very, 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 very long time. And that's been one of the joys of owning an EV. I do a lot of miles. At one stage, I was doing, 40,000, 50,000 miles a year. So in the Tesla, it's got free supercharging for life. I've never, ever, ever paid for charging in the last 6 years. So pretty much, I run my car. I paid it off last year. I ran my car, I had a finance on it over the period of time, but now I've got no running costs whatsoever. I got to change tires once a year, which is about 1,400, 1,500 quid. But that's pretty much about it. Then servicing every 2, 3 years, which is about 500 quid. So I have very, very little running costs for my car, period. It will be a shame to say goodbye to it when we move. What happened to the connection there? There we are. I think we're back. Are we back? Yeah, we're back. But yeah, it will be a shame to say goodbye to it when we finally move off to Dubai next year, if all the plans are come to fruition as they're intended to. I don't even know what I'm going to do. I don't know whether I'm going to sell it, whether I'm going to give it away on the channel. That's one thing that I was thinking of doing, was actually give it away on the channel as a raffle to somebody who watches it. It's been a really, really good car for me, and it has really done and served me well. It really, really has. But yeah, the joys of owning an EV. It's not always, sunshine though, because those things are extremely, extremely expensive to fix. Like, I've had a couple of things that I've had to change on the car, and it's like, for example, I had to change my rear camera about 6 weeks ago. For a camera, it costs £600 for a camera, for a rear camera. It's ridiculous. But I haven't had any other running costs. So you can argue, well, you're offsetting it because you've not had to pay for fuel, you've not had to pay for MOT, you've not had to pay for road tax, you've not to pay for all these other things that other people do have to pay for. So it's it evens itself out. AMC still up 53 at this point in time. A little bit of a jump there. Let's have a look and see what we got here. Unless it's strategic decision to make people unable to charge at home, flats, own a car, infrastructure needs to improve a lot. Yes, it does. Either that, or certainly for people who have got flats at home, definitely that's going to be an issue. Either that, or you end up with a battery that offers more miles and less intervals to charging, which I think is what most of the manufacturers are pushing towards. They're trying to get a battery that will go 400-500 miles, because at that point, who's doing 500 miles a day? The portion of people who are doing 500 miles a day are very, very slim. And like, one of the things with EV is, they'll say 242 miles or 300 miles on a charge. That is obviously subjective depending on how you drive. I've got a heavy foot, so the best I've got at my car is around about 190, 180, because I do put my foot down. So even if it is 500 miles, you're going to lose a little bit because of conditions, how many people you got in the car, so on and so forth. But one of the big things for that is battery capacity, which is the biggest thing that they're all working on right now, because that means that you don't have to charge as often. Some people at 500-mile range would only have to charge like once a week if you're driving a lot. For people who drive even less, probably charge once every 2 weeks. So This is a good question. Am I investing less at the moment, waiting for correction on stock market? Um, I'm holding at the minute. I haven't put any new money in. I've got a lump sum of cash just sat aside at the moment, and I'm deciding what I'm going to basically do with it. I'm looking at a couple of options, but I want to see if there's going to be a dip, and then basically buy a dip essentially. So I've got a lot of the investments I have. I still hold. They're still there. Some of them are down, some of them are actually up. Some of them have actually done really, really well. My money farm has done extremely well because they rebased the portfolio halfway through. Where are we right now? We're in June right now. I think they rebased. Are we in June? Yeah, we are in June. They rebased halfway through back end of April. So that's done really, really well because of the fact that they rebased it. So that's done really, really well. So I'm holding my portfolios at the minute, but I have got a lump sum of cash at the minute that I'm kind of like sat on at the minute, waiting for an opportunity to get in on a dip. So yeah. Any reputable sources you can go to learn day trading? I don't know. I don't know anyone who provides any day trading kind of like academies or anything specifically. Um, I was going to go to Jack then, but he's more of a forex guy more than anything else, and he's the only one that I know that isn't full of crap, basically. Um, some of the principles are relatively the same though, so he may be a good one. But his channel on YouTube is called FX Education, so maybe go check him out and have a look at a couple of his videos on there, because the fundamentals of what he teaches is transferable across into stocks as well. Yeah, this is true. The last time we went, we did see that actually Tesla. I mean, we've been a lot of times to Dubai, and I've only noticed them being out in Dubai properly over the last couple of years. Um, but you know what? Even if we go to Dubai, I don't. I'm not sure that I would buy. I'm not sure that I would buy a Tesla out there. I mean, I probably would because I need a car, but I don't know. Depending on how things basically go, because like let's put it this way: in order for Dubai to happen, there's a lot of stuff that needs to happen in the background. But one of the things that I have said to myself is I do have a very specific goal around if we go to Dubai and everything goes to plan. I will get another car out there, but it may not be a Tesla for a period of time. I want to see what it would be like to actually have, something like a Huracan, like a V10 or something like that, like an R8, and run that for, I don't know, 3 months or something like that. And then maybe go back to electric. But even though I have driven electric for such a long time, I love the sound of a V10. Like it's just ridiculous. And yeah, we'll see. Can we just add any this one here? There was any problems finding a garage to take it to when it needs fixing? No, not really. I mean, to be honest, I've had my car 6 times for 6 years, and it has broken down on me once in 6 years, and that's because of the 12-volt battery. So it had to go on the back of a flatbed. That was it. But it has been the most reliable car I have ever had. Like literally, once in 6 years is pretty good. I mean, I put a lot of miles on the car. I think I've got about maybe 130,000 miles on it at the moment. I literally just changed brakes on it a month ago, and that's from new. So brakes, pads all around the car lasting 130,000 miles. That's unheard of. And why? Because it self-regens the energy. So you're not really using the brakes. So it's got 26 moving parts. There's not really a lot to fix. There's not a lot to go wrong with it. But when some of the components do go wrong, well, it does hurt from a financial point of view because it is expensive. I will buy a Tesla eventually, but they just make it really difficult. Poor trading values and uncompetitive financing options. Yeah, I mean, it's funny you say that. I think maybe on some of the newer ones, yes. Sam, so I don't know what you've been looking at or anything like that, but if you have a Tesla that has got free supercharging, right? So mine was got free supercharging for life. And Tesla have been a little bit cute with this because, so for example, if I sell my car and I sell my car back to Tesla, my car has got free supercharging for life attached to it. They have the right to then take it off. So if they then resell it to somebody else, they don't get the free supercharging for life, which means that they will have to pay for supercharging, right? Which is money in Tesla's coffers. So if you get a Model S, for example, and maybe this is something for you to go and have a look at, go and have a look at a Model S. You need one that is before 2019, and look for one with supercharging for life. You might pay a little bit of a premium for it, but there are some that have got really good deals out there at the moment. If you can get one with autopilot as well, mate, you'll pick one up for an absolute bargain. But the free supercharging for life will add value to the car, because I know for a fact that the free supercharging for life on my car is probably worth an additional £5,000 straight off the bat immediately, because no one's going to have to pay to charge the car moving forward, regardless of whether I sell it or not. The Murray T50, someone said that, yeah, the Murray T50 is ridiculous. It's an absolute joke. Okay, this is interesting. I didn't know this either. I didn't know that their CEO quit after they experienced this growth. It's kind of made me completely lose faith in them. I didn't know that either, actually. They must have kept that quiet. I don't know. Trading 212 is a weird one, really, because I think they've reached their maximum capacity in terms of customers that they're willing to take on now. The growth was ridiculous, to be honest. And a lot of companies will have that. They'll be like, if we get to X volume, then it's too much, effectively. And you know, we'll have to cap where we are. But who knows? Who knows? I know customer service was an absolute nightmare before. Obviously, the whole GME. I keep saying GME and AMC saga in January. So they've just been on hold, haven't they? Interesting, though. Yeah, this is a good question. What do you think will do better next? Value or growth? I think it depends on the cycle of the market. I think in cycles where the market is either going sideways or heading into what would be deemed as a recessionary period or a period of slower growth, value stocks will do better. And that's why value stocks are always companies that most people hold in their portfolio as the foundation, because you're looking at fundamentals. Value stocks are typically companies that have been around for a very, very long time, paying dividends, turning over a load of cash, have market dominance and strategic advantage. It's typically those kind of companies. I think AMC's on a bit of a run. That's 55 at the moment. That's actually gone up quite a bit on here. The RSI is quite high now. RSI is at 75. So we'll see what happens with this. But yeah, I think in recessionary periods, then you're going to have value stocks do better. When things are kind of like bullish, then growth stocks will generally take a hit. I mean, if you look at over the last maybe 12 months or so, growth stocks smashed it out the park without question. So it really depends on the cycles. One thing that you will find, though, is that sometimes, to a certain extent, it's not always true in most areas, that growth stocks often can be cyclical businesses. A lot of the time, value stocks aren't cyclical. They just continually sell their product, make good money, make good profits, pay out dividends. So they're less influenced by cycles, if you will. Big gap up there. Cool. Yeah, you know what? I actually should. The thing is, I don't talk about it a lot. I don't talk about it a lot because I don't think it's really that relevant that I have one. People say to me, you should show it more on social media. You'll get way more followers. Or if people are following me just because I drive a Tesla, then they're following me for the wrong reasons, in my opinion. But yeah, I just don't talk about Tesla as much as I probably should, given the fact that I actually have one and I drive one and I pay a lot of attention to the company. If I did, it would make more sense. But I don't know. Maybe I might actually, you know what? I will put my referral link in the description of this video and maybe pin it for anyone who does watch this stream who's looking at a Tesla. But yeah. And this is a good question. I mean, look, there's been a lot of news around a lot of people just being idiots, complete and utter idiots. Setting autopilot, then getting in the back seat or getting in the passenger seat and then steering with their feet. It's like you're nuts. Autopilot is not autonomous driving. So don't get me wrong, it can do a lot now. I mean, I've been in them. You can set it and you can indicate, it will switch lanes for you, it will monitor traffic, it can read speed limits now, slow down, it can keep distance, it can do a lot of stuff, but it's not fully autonomous just yet. So I haven't ever been in one where I've used autopilot and found myself distracted or diverting my attention to something else, because I know that I still need to be able to intervene because it's not a perfect system just yet. It's great for what it does. It does take the stress out. It means you haven't got to put your full attention into driving, but you still need to pay attention nonetheless, because it's not a perfect system just yet. Actually, you know what? I completely forgot actually having a look through this. Bear me 1 second. Where are we right now? Where are we right now on the likes? There's 30 of you, 30 likes and 59 of you. So about 50%. That's good. But if you can smash the like button, if you haven't already, that will be fantastic. Let's have a look at this one. How can a company have a valuation of 1.8 billion USD but only have revenue of 3.5 million USD last year? I researched a company that was very innovative, but this disparity kind of puts me off. It depends on where else they're generating value from, mate. So what does the company do first and foremost? Do they have patents? Because if they have patents, that will increase the value of the business on paper. So it depends on where they're generating value from. It's like, what intangibles are they including in there? I mean, a patent will be a tangible, not really an intangible, but there may be other intangible factors that they put into it as well. So that will be the question. What do they do? And do they have any patents? Because the patents will hold value. All right. End of the comments there. Right. So where is AMC right now? 56. So it's up on the day. I don't know. I think I might sit this one out today. And just monitor it. But I just wanted to jump on anyway, just to kind of do a little bit of a live. I do enjoy doing these because I'm able to kind of interact with people one-on-one and just have a little chat. 3D printing. Yeah. So interesting. I don't know. Have they got any patents? Maybe, possibly. Not really sure. But yeah, I wanted to do this anyway because be able to interact and stuff like that. And again, guys, if you are involved in this kind of stuff, make sure that you're comfortable with your strategy with AMC. Right? You have to have your own personal conviction around this kind of stuff. If you're up, you're looking and you want to hold, absolutely hold. But please do have an exit strategy. Okay, please have an exit strategy, because these kind of opportunities, they may only come along once in a lifetime. So you want to make sure that you're doing the right thing for you and you're able to control that monkey on your back that makes you sometimes panic and stuff like that. And if you are in it for on a day trade or scalping basis, then make sure that you stick to your strategy. Don't be too greedy, and just hold to your plan as much as you possibly can. I've got a meeting at 5, so I'm going to get off and do some prep for that. I might come on a little bit later on. I don't know. It depends when I finish my meetings. I've actually got 3 meetings this afternoon after 5, so we'll see what happens. But actually, I do have a video coming up in about 26 minutes. I'll talk about this, by the way, and give a little bit of my take. So yeah, guys, I will see you later on. Catch you in a bit.